Single-member LLC versus sole proprietorship. Before starting a new, solely owned business, it is important to understand the pros and cons of two popular business structures, the limited liability company, LLC, and the sole proprietorship. To make the best decision, you should carefully consider your choice of business entity from multiple angles, including ownership and control of the business, asset protection, and tax implications. As you begin evaluating, remember to understand the main advantages and disadvantages of sole proprietorships and LLCs. Evaluate the strengths and weaknesses of each as they pertain to your business needs. Consider that what's best for your business depends on your unique situation. Compare the similarities and differences between sole proprietorships and LLCs to make the best choice for your business. Advantages of a single-member LLC. A single-member LLC is generally shielded from personal liability for debts associated with the business. Other benefits of forming a single-member LLC include the following. Protecting assets. LLCs can be a good choice for medium or higher-risk businesses and for owners with significant personal assets they want to protect. This is because owners are shielded from personal liability as recourse for the acts of the LLC. As such, creditors can't pursue your personal assets, like a home or savings account, to pay the business debts. Separate legal entity. An LLC is a legal entity that is separate from the owner in the eyes of the law. This means your LLC is held accountable for its actions when entering into agreements or contracts, acquiring debts, or otherwise taking on business obligations. Credibility. Starting an LLC may help a new business establish credibility more so than if the business is operated as a sole proprietorship. Taxes. LLCs typically do not pay taxes at the business entity level. Any business income or loss is passed through to the owners and reported on personal income tax returns. Any tax due is paid at the individual level. Disadvantages of a single-member LLC. While there are many good reasons to choose a single-member LLC for your business, there are disadvantages to be aware of as well. There are additional requirements for a single-member LLC, including, but not limited to the following. Naming restrictions. Your LLC's name must include LLC or limited liability company and other rules and regulations associated with naming your single-member LLC depending on your state. Your LLC's name will also have to be different from the names of other domestic and foreign LLCs and other business entities. Publication requirement. Depending on your state, you may need to also file with the county, in addition to publishing notice of your LLC formation in a local newspaper or an initial report filing. Filings. Most states will also require you to complete periodic filings, such as annual or biennial reports, as well as pay franchise taxes. These additional filings and costs vary by state, so it's critical that you're aware of all potential requirements. What is a sole proprietorship? Sole proprietorships are the most basic form of business structure. If you don't form a business entity, like an LLC or corporation, but start conducting business, you're automatically considered a sole proprietorship. Because there is no separation between assets, you can be held personally liable for the debts and obligations of the business, which is one of the main differentiators from an LLC. Advantages of a sole proprietorship. Sole proprietorships are ideal for low-risk businesses and entrepreneurs who want to test their business idea before pursuing a formal entity formation option. As such, there are many advantages. Cost. There is no cost to establish a sole proprietorship, which makes it a popular option for entrepreneurs with little to no funding. Control. The owner maintains 100% control and ownership of the business. A sole proprietorship can have only one owner, and that owner is entitled to the profits and control of the business. Maintenance. A sole proprietorship is easy to dissolve once the business closes. By definition, when you stop doing business, you no longer have a sole proprietorship, but you do need to remember to cancel all licenses and registrations that are associated with the business. This includes canceling your DBA, doing business as, name if you registered a DBA name for your business. Taxes. Filing tax forms is easy. Simply complete the IRS Schedule C. Disadvantages of a sole proprietorship. It's important to consider the disadvantages of a sole proprietorship. While the financial savings are appealing, there are drawbacks to this business structure. Liability exposure. The biggest drawback of a sole proprietorship is your potential for liability as the company owner. If your company can't pay its bills, creditors or lawsuit claimants may be entitled to confiscate your personal property and money from your personal accounts since you are personally responsible for any debts or obligations of your company. Raising money. You may struggle to raise money because, with a sole proprietorship, you can't sell stock. Banks are also often reluctant to lend to sole proprietorships, making it difficult to get a loan. Rigid ownership rules. If your business changes and you want to bring in another owner, you'll need to register for an EIN, Employer Identification Number. By bringing in another owner, you go from a sole proprietorship to a general partnership. You are no longer the sole owner, and thus, cannot be registered with your Social Security number. When deciding between a single-member LLC and a sole proprietorship, focus on the needs of your business. As an entrepreneur testing the waters, a sole proprietorship may be an easy and cost-effective option, while a fast-growing business that needs funding would be better suited to an LLC. Consider your business objectives when reviewing your options, from financial to operational, to make the best choice for you and your business. Starting an LLC? Let us show you how to do it in a right way. First thing first, the whole point of an LLC is to separate you and your business. That's what protects your finances and privacy. Start by appointing a registered agent. Your LLC official point of contact. Hiring a registered agent is smart and affordable method to maximize privacy. Next, see if your name is available by checking your state business database. Now you are ready to file state paperwork. The average fee is around $100. Apply for a free EIN from IRS website. Having your tax ID in hand you'll make the rest steps easy. Put your LLC policy in writing with an operating agreement. Make it easy with free template like ours. Remember when we said LLC separates you and your business, that's why your LLC needs its own bank account. Your bank account does not do any good in empty, time for each member to contribute. Be prepared for annual files and fees like state reports and taxes. Check the link in the description below. Start your LLC with Northwest Registered Agent.